This is section one where we will be discussing about the market and we'll start with Nifty. So let's check the candles first. So this was Friday, Thursday, Wednesday, Tuesday, and Monday, right? So it was a 5 days week and we have all the candles in place. So what we discussed last week, we discussed that market has rebounded very nicely and strongly after day one, and we have had a follow through day on day four, which was very strong. The market did not come down and it took the support around 21 EMA on this day and it rebounded again. And thereafter, we have had a second gap up. Again, there was one gap, and thereafter, we closed around this point, right? The closing last week was 24,354, something around that, right? Uh, somewhat below 50 DMA, and 50 DMA was kind of trending downwards. So, since the market was much extended, so with higher probability, we discussed that there might be a chance that the market might reverse back and the gap might be filled. So, there are two gaps. So gap number one is this, the high of which was 23,907. So this gap was there and the market just ran off just like that. So it was highly probable that the gap might be filled. So that was one scenario. Number two is the second gap, which is like very, very strong. Due to this gap only, the market is raging ferociously right now. So what we have seen in last 3 days is after Tuesday, right? So after Tuesday, till Tuesday, the closing was very nice. So it recovered above 50 DMA, but suddenly it cracked below. And again, those geopolitical things came up regarding the war that is happening. And the crude price started climbing up and the market reversed back. Okay. So this was the day on Wednesday, then Thursday, then Friday. Friday was a very bad day. I mean, the day started with negative tick, and thereafter it continued to roll down throughout the day. I think at one point of time it was down minus 300 points or something. Okay. So due to that, what has happened is this gap is filled now. This is a very good scenario. I mean, this is a very constructive scenario. This should not be taken as the start of a new correction. That is not there actually. Okay, so this should be constituted as a very nice start of a consolidation after a powerful reversal rally, a V-shaped rally that has happened from the bottom. Okay, so it took how many days? I mean, at max, it might have taken 15 days to recover from the bottom in V-shaped rally. And for last 3 days, we are falling. Okay, this is not a big deal. So a good thing that has happened is 23,907, the high is now touched or this gap has been filled, which is a nice scenario. The bad one is, again, the Nifty is below all the moving averages, right? So this 21 EMA, 23,936 is broken and Nifty closed below that. The short-term moving average is also above that, and medium-term 50 DMA is above that, right? So these three moving averages are above the current levels of Nifty. And finally, we have 200 DMA, which is far away, right? So just remember one point that the ferocious bull run, which means that maximum or the full raging rally would start only if the market makes all-time highs, right? So there are stocks obviously which are making all-time highs right now based on the reversal rally that has happened, but that's a small portion of the overall market. So the market as a whole, which is depicted by Nifty, Sensex, and likes of that, so it has to cross over the all-time high of 26,373 and then it has to start a rally, right? Below that, it's all opportunities. So this is the scenario right now. So by opportunity, I mean that as per the reading, based on the data that we have underneath the market as well as the chart, right? This is the start actually. So after a long decline and a severe crackdown in small caps and mid caps, so this is just a start wherein we are seeing a nice reversal recovery, and we expect that consolidation should happen on the right hand side. Okay. So how long that would happen, that we don't know. Okay, it depends upon the geopolitical scenario. It depends upon the earning strategies upcoming, like all these days, right? In April as well as May, right? It would be earnings month, right? And beyond that, we have to see how Nifty consolidates below 200 DMA and around this level, right? So what to see next for next 2 to 3 weeks to say, or say 2 to 4 weeks. we should expect a nice consolidation on the right hand side after a V-shaped reversal recovery. So whenever a V-shaped rally happens, right, so there happens to be a nice handle formation or a nice consolidation on the right hand side. Now the question would be how deep it could go, right? It depends. Again, it depends upon the severity of the fall correction and how things are taken up, and if peace happens in the war or not. If crude comes down or not, somewhere close to 85 would be a good scenario, but it's far away from that point. Anything above 9,500 is a bad scenario for Indian economy. Just mark it down. It would impact a lot of companies in the upcoming result season, like quarter one of FY27 would be impacted big time for a lot of companies due to this high prices of crude, LNG, and stuff. Shortages also, right? So what we expect is a consolidation on the right hand side, a good consolidation on the right hand side, and if this gap is filled, right? So the second thing that I hope that my point is the sooner this gap is filled, the better it is. Okay, the farther it goes, the more the pain we would see. Okay, so this high of 23,154. So I am taking a range, okay? 23,154 till the level of 23,907, right? So this is the zone, like this 750 points zone within which the Nifty should consolidate. That is the point I have right now. And if it does like that, that would be a very good scenario. Okay. That is point number one. Point number two would be once the support is taken, right, and this gap of 23,154 is filled. So I'm not attaching a probability as of now since it's far away from this point. So in many or most of the bull run that happens, usually it's like the gap remains unfilled. Okay, even if it fills by a small percentage, for example, it might be filled by 40% or 60%, right? Still the gap might remain open. So there is a zone. There is a zone of 23,154 to 23,907. Okay. From this high till this candle's high, there is a zone. So within this 750 rupees zone, if the consolidation happens for Nifty, right, it would be a perfect consolidation. And if it takes support somewhere close to 23,154, or say if further breakdown happens and 23,000 acts as a strong round of support, right, that would be a fantastic scenario. Okay, that would be point number two. Point number three is if such consolidation happens, right, then the market would be bound to have a reversal recovery again, and that would lead to a second contraction formation in the consolidation on the right hand side. Okay, by second contraction, I mean it would look like this, somewhat like this. Okay, the first contraction that we are having right now is looking like this. Okay, just yeah, like this. Okay, so this is one, this would be second, and there would might be a third one, we don't know. Okay, so the whole play right now for next 1 or 2 months would be the level below this 200 EMA, that is below 25,000 and between 23,154. These 2,000 points would be a very uh, determining zone, right? And within that, the current bias is like the first gap is being filled. The second gap is open to be filled. We have to see if it is filled or not. We have to see. We don't know what might come up in next coming 2 weeks or not, right? We would analyze every week. But if that gap is filled, I am very hopeful and very optimistic that that is a very good scenario. Nothing to panic. Okay, we already have a very good signal of bottom in place. That is the day one. Okay, let's revisit this day one. The bottom of 23,182.6. This low is maintained. As long as this low is maintained, no harm done. Okay, it's the best scenario right now in the market, and this follow through day is there still. Okay. Now, point number three would be a good consolidation on the right hand side, and that would give an opportunity for individual stock picking. So, actually, I mentioned in the last call. So, right now, I would also mention that from the follow through day, there happens to be a period, right? 4 to 6 weeks, or take it 1.5 months, right? Within 1.5 months, there would be a lot of stocks that would be breaking out towards their all time highs, right? And if that breakout happens, there might be a possibility, if that is with the triggers, that might lead to a creation of a new true market leader. Okay, by true market leader, we mean if the journey is early, the trigger is early, if theme is there, if growth is there, if earnings are there, then there might be a potential opportunity for that stock to be a multi-bagger in the new bull run, right? So what I'm saying is from this fall today, like at this point, there is an opportunity for 1.5 months there still, right? Where individual stock picking opportunities might come up again and again, and one has to look after that and keep on looking for such opportunities in order to find great stocks, right? And that is where the opportunity for the market constellation appears, right? So I would conclude like Nifty with the point that if the constellation happens on the right hand side with gap filling of this gap, right? This would be a very good scenario. If that does not happen, still, right? If it recovers above 21 EMA and recovers above 50 DMA, right? Then 24,284 would be recovered, and we would be trading around above 24,000 levels, right? That's also fine, not a big deal. Like this is not in our control, right? So the whole market is being controlled by, say, greed, fear, and all those emotions. So whatever happens, we'll analyze. We'll not predict anything before, right? So the overarching theme that I would conclude the Nifty chart with is we should go into a constellation mode. The consolation would not be that deep. Okay, there is a narrow range of only 750 points from here. The consolation should be like constructive. It should not be destructive, which means like a lot of charts would be broken down like it was broken like 1 month back. Okay, it would not be like that. It would be a constructive constellation. And thereafter, we would see a lot of stocks breaking out into new all-time highs and in stage two and like that. Okay, there the opportunity lies. Okay, and last point, this would be a market which would give an add-on dips opportunity. It's not a sell on rise opportunity, but the sell on rise would continue on those names which have broken big time in last decline. Okay, if the stocks are down, say 30, 40, even 50%, right? Any reversal recovery of 30, 40, 50, 60%, if it happens in individual stocks, it's an opportunity to exit that name if the growth is broken and the stock price is broken. It's as simple as that. So if on the right hand side constellation continues and if the broken down stocks reverse back towards the middle of their highs or something, it gives an opportunity to exit. Then just exit those names and raise cash. That is one. Number two, there would be a lot of new opportunities where new names would get into all time highs and break out in stage two. That would be the real taste of opportunities and stuff. Okay. So I'll close NSE Nifty with that point only, and we'll move to mid cap, right? So this is the mid cap ETF that we are looking into right now. So mid cap has already closed above 200 EMA, which is a very nice scenario. Okay, so it has broken down below 200 EMA, but right now it is above 200 EMA and it is very strong as compared to Nifty, right? So mid cap is pretty strong, and no comments on this one. It's an orderly decline and an orderly recovery. So we'll have to see in times going forward how things pan out. But all in all, mid cap is stronger than the NSE Nifty, right? We'll look into small cap and then we'll see the real game there. Okay. So basically, if we look into small cap, right? So again, as we discussed last week, it was struggling around 200 DMA, okay, and it is extended big time, like a continuous 15 days plus kind of move in one go, okay, not taking a breather, nothing like that, okay. It tried to hit the 200 DMA continuously, right? Day one, two, three, four. It tried to move above 200 DMA and then significantly declined, and it is taking support at 10 DMA, right? So it's an early support, right? But after such a ferocious rally from the bottom, right? After a double bottom that we discussed, let me show you double bottom again. This is the left hand side bottom. This is the right hand side bottom. So a double bottom formation was there in this ETF. And thereafter, a nice 3 weeks reversal recovery. Like this is week one, week two, week three. Week three was very nice. This reversal recovery happened, and then it is taking a resistance around the 200 DMA, and now is the opportunity for consolidation. Okay, the most important or major point for support for this ETF would be around 42 rupees and finally 41 rupees. Okay. And this would be an orderly constellation, which means that if it comes down and touches 42 and 41, it would be an opportunity. And then if it forms the handle on the right hand side, finally there would be an opportunity for this ETF to cross and close above 44, this 200 DMA, right? Again, a narrow zone between 41 to 44 exists. And this is a narrow zone of, say, 9% only, not a big deal. So, and if that constellation happens, that would be a very nice scenario. And this might lead to further opportunities that might spring up in future. Again, we are far away from all-time highs in small cap. So the real opportunity right now lies in the small cap segment only. Okay, mid cap is a safe zone, not around highs, not lows. Okay, it's in between. But the laggard right now is the small cap and large cap, we can say. But small cap is very fast in recovery and has done nothing from September 2024. We have discussed a lot of time that the small cap has been in a downhill from September 2024. Right now, we are standing in April 26. So a lot of time has been wasted. And again, I believe till September, right? We would not be in a position to be at all-time highs. That is what I believe as of now, because a lot of challenges we might face in next 2 quarters and geopolitical scenarios and stuff. But again, any constellation, if it happens, that would again be an opportunity to create initial positions in small cap names, ETFs, and likes of that, right? So, and if it goes to all-time highs, then again, all-time high is around 55. And if all-time high is broken, that would be a nice all-time high breakout. And again, new journey starts from all-time high only, right? So again, this journey is very very early, is what I'm saying, and let's see how things pan out. Again, right now for small cap, this is just a V-shaped reversal recovery, and it might take time to consolidate on the right hand side, as long as the market consolidates on the right hand side. Okay. So this is the first attempt to hit and cross above 200 DMA. We have to see how many attempts it might take to cross above 200 DMA. Since on the left hand side we have seen multiple times that a lot of rejection, one, two, three times rejection happened, and last time it did not go up to 200 DMA even, right? It fell down just like that. So right now it is the first attempt. It might take 2 or 3 attempts more to hit the 200 EMA and then close above it, and then further resistance is coming up, right? So a major resistance for this one is around this high of say 48, and finally this is the best one around 50. Lump sum 50 would be a strong resistance in this small cap ETF, and since that is the middle of the W, right? This is the W formation, it has to close above 50 and then continue the rally towards all-time highs, right? So that is far away. So right now we are very, very early is what I'm saying. So one does not need to get into FOMO and stuff, saying that, okay, in last 10 to 15 days, we have missed a lot of stuff. It's not like that. Things are very early, and I'll conclude section one with this thing only, that this is a formative stage as of now. So no need to panic or get into FOMO or catch extended names and stuff. Be patient, disciplined, understand that there is a procedure in place. We have to follow rules, procedures. We don't have to predict what things are going to happen in future. We just have to analyze, okay, and position accordingly with stop losses and maintain the proper risk management strategies in place, right? That is what we have to do, okay?